In this video, we are going to talk about the time to enterprise value. It's an important concept to understand. What is the safest state of a company? Okay, what is the safest state? The safest state of a company is when the market cap, that's the price that you pay for the stock, equals the cash on the balance sheet. So if your market cap, for example, you have $50 million market cap of a company, and they have 50 million cash on the balance sheet, then you are in the safest state because your market cap will never go below the amount of cash on the balance sheet, right? Otherwise, it's illogical because you would have more cash than the market cap. So this is the safest state when you have exactly the same amount of cash as the market cap. You can also see this as the enterprise value being zero. So enterprise value is market cap minus the cash plus the debt and all the other liabilities as well, like rehabilitation, that's also included, being zero. That's the safest state. Safest state is when your enterprise value is zero. You can never go below that enterprise value. Okay? And we can apply this to the gold miners. And why am I looking at this? Because gold, you never know what gold will do. Gold can go to 4,000, but can also go back to 2,000. You want to make money as fast as possible in this market. You want to reach the safest state as fast as possible. Because you never know what gold is going to do. It could drop back to 2,000 and then you will never make money anymore. But of course, it can also go up and then your future cash flows will be much higher. But we want to make money as fast as possible, make sure that we make a lot of money at this gold price. So you want to do that with the lowest time to enterprise value. So let's look at these two companies as an example. Here we have Soma Gold. The time to enterprise value is here 3 years. So 1 to 3 years. This is the safest state because here your market cap is exactly the same as your cash balance. So these are the cash flows that come in each year at the current gold price. And in 3 years, you reach your market cap. Okay? And then at this point in 2027, you can throw rocks at Soma Gold, whatever you want. It will never go lower. The market cap cannot fall because you are in the safest state where market cap is exactly the same as the cash. Okay? And whatever happens here, it could go up, it could go flat. There's always upside. Now, Lundin Gold, for example, the safest state here will only be reached in 2037 at the current gold price. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 years before you reach your market cap. That's dangerous. Okay? Very dangerous because you never know what will happen to the gold price in those 13 years. So if gold stays at 3,300 for 3 years and then drops back to 1,000, okay, then this goes like this, and then here it stops making money. So you will never reach your market cap anymore. And then the market cap will drop, of course. That's the danger with Lundin Gold. With Soma Gold, in 3 years you get to your safest state. So if we stay here for 3 years, and then drop to 1000, doesn't make any difference for Soma Gold, because Soma Gold would have 120 million in cash on the balance sheet in 3 years. And then it can do whatever it wants. If gold drops back to 1000, they can just close their business and give the 120 million to the shareholders. Okay? No downside risk after 3 years. Lundin Gold, however, after 3 years and gold drops to 1000, then this has a downside of at least 50%, minus 50%. This after 3 years, it will have no downside. Okay, so that's the concept of time to enterprise value. Now I have charted out all of these enterprise value NPV charts, and you can see it here. The least risky one is Tor Explorations, because they have so much cash flow and the balance sheet looks good. In 2 years, they will reach their market cap with the cash flows. So this is probably the least risky miner out there when you look at the outlook for gold. So in 2 years, this one will never go down anymore. Some other ones, yeah, Majestic Gold has a lot of cash on balance. Starcore has a lot of production and to make a lot of money. Monument Mining, also very good. Then we get to Serabi Gold and Mineros and Soma Gold. Okay, so these are actually the least risky miners, which is a bit counterintuitive for some people, but these are the least risky. These, however, are the most risky plays out there. These are the large caps because they need 10 to 12 years to reach their market cap. Lundin Gold, Agnico Eagle, Alamos Gold, Kinross, Kerr Mining, these are all risky plays. Why? Because you never know what gold is going to do. If gold goes back down, then you might make some money here in the first 3 years, and then it ends. It ends, and the share price will drop. Of course, if gold keeps on rising, yes, then there is a lot of leverage. These cash flows will go even higher, and yeah, then you have, of course, upside. But this is about the time to EV reaching the safest state, so that you have no more risk on the gold price. And that's an important concept to understand, because you never know what gold is going to do. Okay, so take a look at this chart and pick your miner.